All right, so Ivory Coast has become the first African country since 2022 to issue a Eurobond, and it's quite interesting, at this time, knowing fully well that 2023, most African countries, ran away from that Eurobond market because it was really, expensive, having to deal with the debt restructuring and all of that. Let's bring in Ayodeji Dawodu now, Head of Africa Research at Bank Trust & Co., joining me via Zoom. Great to have you on the show.
Thank you very much, Laddie. Good morning.
Yeah, so is it really time, to head back into the Eurobond market for Africa? We know why most African countries, ran out of it and, avoided that market for a while. It was quite expensive. But is this the time to go back in?
I think we're getting closer by the indications we're seeing, especially with the successful issuance by Ivory Coast. I think it's a case of timing, who goes next and how much they may potentially look to raise. But I think one thing to really highlight is the Ivory Coast issuance was very successful, but the credit itself is exceptional. I mean, it's probably one of the best credits in the sub-Saharan region. The rest are a little bit further away. I mean, if you look at Nigeria and where Nigeria is trading, it's a bit wider compared to Ivory Coast, especially across the curve. I mean, Ivory Coast successfully issued around the 7% levels on the sustainable bond, closer to 8% on the standard bond. I think Nigeria probably find it a bit challenging to raise at those levels, similar for Kenya and Angola. But I think we're getting closer to the time where we will see a few more credits coming to the markets to raise funds.
All right, so talk to me now about the market, generally, that Eurobond market, and looking at the situation in Nigeria. We see the total debt stock is really high at this time. Do you see Nigeria heading to that Eurobond market anytime soon? Because we also need to fund our 2024 budget.
I think Nigeria will go to the bond market. Like I said, I think it's a case of when. We are potentially anticipating the authorities coming to the markets in the second half of the year. Part of that is due to potential improvements in the global environment, particularly the likelihood of a Fed interest rate cuts in the second quarter of this year and into the second half of this year as well. I think that would bode well for Nigeria coming to the market. But I think the performance of the government as well will likely shape the timing of the authorities coming to the market. I think foreign investors are a bit uneasy with the performance of the authorities so far since coming into government. I think the sentiments have deteriorated over the last maybe 3 or 4 months. Reforms progress has slowed, and I think generally foreign investors will be looking at the MPC meeting in February. Right. 1, to see if it will actually hold, and 2, to see what the outcome of that will be. I think there's a huge signaling factor that's going to come from that MPC, both on interest rates and FX. Right, countdown to the first MPC meeting of 2024. We're all looking forward to it. Thank you so much for coming on, Deji Dawodu, Head of Africa Research, Bank Trust & Co. Thank you so much. Thank you, Daddy. Thank you.